Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. We got Gary Gensler live on the phone in just a couple of seconds from Wall Street. We're going to keep our eye on that, and then of course we've got the PPI, CPI data coming out. Very exciting. So we're going. There's the White House watching, paying close attention to this morning. So this is an extra added part of our show today. Bit of a surprise. Gary Gensler live on the show any second now.
Gary Gensler has become a member. His exit interview. The SEC leadership still making headlines with just 4 days left before President-elect Donald Trump taking office. The current SEC chair, Gary Gensler, stepping down. Yesterday, two Robinhood broker-dealers agreed to pay $45 million to settle SEC charges that they violated more than 10 security law provisions related to brokerage operations. We're going to talk about that and so much more. Joining us right now is SEC Chair Gary Gensler in his exit interview. Gary, thank you so much for joining us.
Great stuff.
And thank you for talking with us throughout your time in office. There's about 100 questions that I have on my list, but I want to start with one that I think actually may be, in a way, the hardest. And I think it's a political question, but it's also a philosophical question, which is when you look back at the work that you did over the last 4 years, and you also look at this election. This is a live Gary Gensler interview. And you look at before data, the number inflation. Of folks in the crypto world who ultimately not just turned out for President-elect Trump, but turned out for President-elect Trump with money, with dollars, the huge amount of money that went into effectively his campaign as, to some degree, a rebuke of what was happening with your efforts to block some of the things that they were doing. I'm so curious how you personally think about that today.
First, Andrew, Joe, Becky, so good to be with you, and thank you for inviting me. Look, I think, I believe deeply in our great democracy. I think that this election, though, as you point out, there was money raised from the crypto field. I don't think that's what this election was about. This field, the crypto field, a highly speculative field, has not been compliant with various laws, whether it's anti-money laundering laws, sanctions laws, or in our case, securities laws. Now, Bitcoin's not a security, but these 10 or 15,000 other tokens, the investing public has been hurt over the many years. My predecessor, Jay Clayton, who's going to serve again in the Trump administration, but Jay Clayton had brought about 80 cases. We're a law enforcement agency. That's what we've continued to do to protect the investing public so they get disclosure, to protect against fraud, manipulation, and there's just been too much of that in this field. Right. And then, of course, to address conflicts when you had these crypto exchanges not only operating as exchanges, but also trading against their customers and on and on.
Gary, I think the question, though, is, some critics have said that the SEC has pursued a policy that has been focused more on litigation, if you will, or rules by way of litigation than actual law. That perhaps there should have been a greater effort put on creating real laws, not just guidelines, which then created this litigation. I'm looking, by the way, at even what just took place in the last, 48 hours from this court as it relates to the Coinbase case, where they're asking the SEC now, effectively you, to, quote, explain yourself as it relates to some of the things that are being done. And by the way, the judge in the case said to the SEC, quote, it should not give yet another poor explanation in an already long line of them. And so I know it's a hard question, but I put it to you because I think that the public is trying to understand the way you've thought about it thus far.
Look, I thought about it that we have laws. Congress has passed those laws. Of course, they can change them. But a sector of this field, crypto,
live interview with Gary
Gensler, is investing based on projects and these things without prejudging any one of them. Many of them are under the securities laws. And in that field, there's a lot of non-compliance. Look, Andrew, in most of what you talk about on any given day, you talk about the fundamentals of a stock or a bond or the markets, the valuations of mixed fundamentals and momentum or sentiment. And this crypto field seems to trade mostly on sentiment and much less on fundamentals. But if the fundamentals are there, and I say if, then make the proper disclosures under the securities laws. That's the basic bargain.
I was glad to have you coming on today, Chair Gensler, and I was thinking of just an overriding question about Bitcoin and what we've seen for the past 4 years under your tenure. And I can only come up really with two scenarios, and neither one of them are great. The first one is that under your leadership, it was, really dragged kicking and screaming into where we are today, and it's a far cry from 4 years ago. You'd have to admit it, with ETFs and adoption by so many different firms. It's almost like there were so many obstacles put up it made it very hard for what could be a transformative new asset or industry. So that's on the one hand that you did. Or on the other hand, it should have been very closely scrutinized, and at $95,000, if this is ephemeral and built on air and a beanie baby, there's going to be an absolute bloodbath. So either you stood in the way of a totally new industry, or you were unable to prevent a huge bubble from forming, which is going to end very badly. And neither one is going to be much of a legacy to look back on.
Joe, I know from our conversations in the past, you view Bitcoin very differently than these 10 or 15,000 other tokens.
But it was hard for Bitcoin under you, though, under your regime. It was very difficult for anything good to happen for Bitcoin.
Joe, within the first few months in the job, we had Bitcoin exchange-traded funds based on futures.
After a lawsuit.
You recall when I was coming into this role, the whole GameStop events. And that market is so much more critical to you and the American public than crypto. The $60 trillion equity markets. And we have put in fundamental reforms.
Please tap the like button, guys. Share this out. Live interview with Gary Gensler.
In 1 day rather than 2 days if you're an everyday investor. But that actually the markets will be more efficient. We addressed ourselves to the second most important market, I would say, the U.S. Treasury market that had had jitters for so long, a $28 trillion market, and fundamental important reforms. We addressed ourselves to corporate governance, that an insider no longer can file a plan on a Monday the same time they have insider information and sell their stock on a Tuesday. They'll now have to wait 3 months. So I'm very proud of the record and this focus that you all have had on crypto. I understand it brings in eyeballs, it sells newspapers and so forth, but the capital markets at $120 trillion, I'm very proud of our record.
Gary, let me go to a different topic. We're going to move way off of crypto, but another topic that has frankly become quite controversial, which is both climate rules, which are now in litigation that you put forward. And then there were efforts early on that I think effectively either were abandoned or you tell me around ESG rules, boosting board diversity, for example. There were some workforce management issues and other things. And the whole country or world seems to have shifted in some way. You may not agree with the way it has shifted, but I, again, wonder how you think about this election, what you think's happened even in this country.
Please tap the like button, share this out. This is Gary Gensler's exit interview.
Coming out with
bringing it to you live as it's happening.
They're abandoning DEI programs. They're abandoning ESG programs. They're abandoning a lot of the things that were being talked about by this administration and by the SEC as it related to rules and other things that they were trying to put forward.
Andrew, as a securities regulator, I'm neutral to just about all that you just said. We're not a climate regulator and we're not a workforce regulator. We're a securities regulator. But when I came into the role, we had found that of the top 1,000 companies listed on the exchanges, a majority were making disclosures about their climate risks. And investors were telling us that they found those disclosures inconsistent but material to their investment decisions. So we we grounded in materiality. We went out, we heard the public, we got tens of thousands of comments, lots of investors who wanted this information to be more consistent and just based on material information. And I've been consistent since my confirmation that we would ground it in just what's material to investors. As you might recall, the back and forth. Right. Yes, some advocates wanted more, but we're just a securities regulator, and I believe that we rightly just trying to bring
Gary,
consistency.
Even if we could stipulate that it was for disclosure purposes, I'm curious, just on a very personal
live
level,
interview with Gary Gensler as he exits.
Off and
I'm
leaving
bringing
the
this to you live.
What you make
Tap the like button,
this
folks.
reversal
Share this out.
as it relates to ESG and DEI and some of these other things that had become almost a staple of corporate America over the last 4, 5, 6, 7 years that was developing?
Well, I know in just managing the SEC's 5,000 people, we benefit from recruiting and giving opportunities to the diverse population we have in America, 330 million people, regardless of gender, race, or background, or orientation. That helps our agency. But in terms of a securities regulator, really, investors have to decide what's relevant. We did not put forward, we at the SEC under my leadership didn't put forward any disclosure rules around workforce or diversity. We did come in and do something around climate because the markets were already having those disclosures. What I do think is the markets will figure out, the investors will figure out whether the climate disclosure is relevant and material to their investment decisions.
But is it material? It was material a couple of years ago and it's not now? I don't understand the materiality of it. And whether some investors decide that or whether it's just very gray.
I think, Becky, you're right that things can change. 20 and 30 years ago, companies did not make disclosures about cyber risk. They didn't make disclosures around climate risk. I came into the role and found many, many investors wanted and demanded that type of disclosure. And so we took those two projects up. What might be the case 5 or 15 years from now could shift as well. And I think our great agency is just about bringing some consistency and truthfulness, that people don't lie. Think about artificial intelligence right now. Many companies are sort of puffing themselves up and promoting that. It's important that they not, let's say, call it AI wash, that they're truthful in what they say.
Gary, earlier, just to return, just what I understand completely, what you think is going to happen or whether your thinking has evolved, it almost sounded like you wanted to separate Bitcoin from the rest of the industry. And I'm wondering whether you're actually warming
15 minutes before data inflation, stand by.
Of at least Bitcoin. And whether, again, people are tweeting you that I said you either stood in the way of an extraordinary industry or were utterly unable to prevent a massive bubble. What do you think the future holds? Do you have a feeling on which it is? Do you think Bitcoin has inherent value and is a store of value? Or do you feel that when we look back on it 10, 15, 20 years from now, it's going to be something from the 18th century with tulips?
Joe, it's hard to predict. I think I really do like you because I know that you think I'm going to out you think negatively on many of these altcoins. You, Joe, but in terms of Bitcoin. We at the SEC have never said it's a security.
Well,
I have not.
What do you think? You taught at MIT. I think you know. I think you got to have some kind of feeling. You've read the books, Bitcoin Standard.
Yeah. I think that Bitcoin is a highly speculative, volatile asset, but with 7 billion people around the globe. 7 billion people want to trade it, just like we do have gold for 10,000 years. We have Bitcoin. It might be something else in the future as well. Right. These other thousands of projects need to show their use case and show that they actually have fundamentals underlying them or they won't persist, Joe.
Oh my God, you own Bitcoin.
That's where the public. That's why the public needs disclosure.
That's what it's.
I don't.
You love
I've
it.
never owned.
You love.
I've never.
You love it. You don't like those other coins.
I've never owned any of these, and I've been consistent for 7 or 8 years on this.
Well, now you can't because you won't be a SEC chair anymore.
Hey, Gary, different lane. One of the other new features of the market, or a market, is this idea of prediction markets. We just had the CEO of Kalshi on the broadcast yesterday. He has brought onto his business as an advisor Donald Trump Jr. I'm curious what you think of prediction markets, and I'm actually very curious specifically what do you think of Kalshi's decision to hire the son of the president-elect?
I have no views on who somebody hires, but capital markets themselves, our great, vast $120 trillion capital markets, whether it's stocks, whether it's bonds, whether ultimately it's prediction markets, are about predicting future cash flows.
Please tap the like button, share this out. This is Gary Gensler's exit from crypto and the SEC.
That you have on the air.
Big story.
So they're all, in sense, about prediction markets, and that's why I'm so proud what we
need
did.
100
Some
likes
of the
to get this
reforms we
suggested,
put in
guys.
place is to have better disclosure, yes, on only that which is material to investors, so they can make their own judgments about the future. That's, in essence, a prediction market.
Treasuries, settlements on treasuries. There's been a little bit of a debate about what's happened, obviously, this fall, about what the timeline is going to look like into the future after you're out of this office. What's your take?
Inflation in 12 minutes.
Our U.S. Treasury market is the base of our capital markets. I'm very proud of what we did, working with Janet Yellen, working with Jay Powell. It was bipartisan reforms that we put in place to build greater resiliency, lower the risk of our U.S. Treasury market, while also promoting more competition, what's called all-to-all trading. So there's forward momentum. There's still things to be implemented over the next 18 months. But I'd note this. Our $28 trillion Treasury market is predicted by the Congressional Budget Office to grow to about 35 or 36 trillion in 4 years. It's going to grow 25%. And so we need these reforms to make sure the markets work smoothly and taxpayers can have the confidence their government can borrow in liquid markets that the international community trusts.
Gary, what do you think the biggest risk in the market is today?
Look, I think we have a presidential transition and democracy has spoken, but there's policy uncertainty. There always are around these transitions. Some of those policies will be sorted out over time, but there's policy uncertainties for sure. I have spoken over these last 4 years. There's also pockets of capital markets that have a lot of leverage, a lot of borrowing and low margin, and that's usually in this sort of space between the commercial banks providing leverage to the macro hedge funds in what's called the repo market. And then lastly, I do think that artificial intelligence is transformative, already has affected productivity in a positive way, but there's still risk out there on the horizon.
How much do you think about the shadow banking system in terms of the loan market, which in many ways has moved away
12 minutes before data,
from the traditional
CPI,
banks, though
PPI,
there's a connection
inflation,
to the
standby.
Look,
Big day today.
I think capital markets are best when they're competitive, they're deep, and lots have access. That's what we have promoted at the SEC and the reforms we've done. And so the large private fund market, whether it's private credit, private equity, venture, I think that's been a feature, not a bug of our capital markets. And we benefit as Americans to have large, robust, non-bank provisions of capital.
Okay, Gary, before we let you go, here's the final question. And I asked this of Lena Khan, and I want you to think about the answer. If you could do it again and you could do anything differently, given all of the things that we've just talked about, what would it be?
So you don't want me to just say, come on your show more often, right?
We can do that. We'd love to have you back. And now you'll be...
big mistake not coming on.
Now you'll be untethered completely.
Yeah, big mistake not coming on more.
Look, I would say this, Joe and Becky, Andrew, and your listeners. It is a great privilege to serve. I think that we put in fundamental, important reforms on 3/4 of our capital market, the stock market and the treasury market, measured $90 trillion total. We put in place key reforms on corporate governance that insiders can't sell their stock in a day, but need to wait the 90 days, but also with regard to that they have to give back compensation that they might have for erroneous profits. Right. I think we settled a really tough thing with China. So I'm really proud of what we did. But we're human. We're not going to get them all right.
You're an introspective guy.
There we
There's
go.
There's got to be something on the list that you say, you know what?
That was the exit interview with Gary Gensler.
I wish I could have gotten to something. No?
There it is.
Look, I would have liked to have got these treasury market reforms and equity market reforms.
I hope you enjoyed that. Tap the like button, share this out. Big moment.
And this is important to your viewers. The courts are shifting dramatically, and I would have definitely wanted to have been able to anticipate all the shifts in the court so that we could do things that were survived court challenge a little better.
Gary, I want to thank you for engaging with us over the last 4 years. We hope we're going to get to engage with you a lot more unplugged, if you will, over the next 4, and we look forward to seeing you again.
All right,
very
you all
soon.
be well.
There we go. There is the Gary Gensler exit speech we brought to you live just before we go to PPI. So this is a very, very big day today. This will go out with its own video later on. Final words from our XRP Bitcoin friend Gary Gensler as he exits. It's very important to understand the whole market. Click above my head for all the links down below in the description, over here and over here. This will go out as its own video later. Thank you very much for watching it live. We're now going to go over to the live PPI. Expect a big boom today. I'm ready. I bought the dip. Until next time, as always, take care of yourselves and each other.